Alibaba continues its slide downwards and is closed at 97.50 per share as of the recording of this video. And of course, guys, I get it. We're all feeling the pain right now, and I do understand that many of you are asking if it's still something that you should be holding on to in your portfolios. Well, like I always say, I'm not a value investor, I'm a business owner, and all I can do is follow the story from the business operational perspective. And if things weren't going well operationally, I would say it's time to leave this investment, but that's just not the case. In part 1 of this Alibaba Q3 review, we covered the China retail market business, and the company showed us that they are continuing to execute on their business strategy, which was laid out in their investor day. This despite the overall Chinese consumer slowdown. In this video, we're going to go over all of the remaining segments, which are the future crown jewels of this business. So guys, smash that like button and subscribe if you're new. You're watching More Money. Let's get it. What's up, guys? The Alibaba share price does not stop dropping. It has just continued its slide downwards and is closed at $97.50 as of the recording of this video. Year to date, we're now down close to 20%, so you would think that they just had abysmal results, but that really wasn't the case. Yes, as you saw, the Chinese consumer is slowing. That is a reality, and we will not see a rebound in this stock until the Chinese consumer shows some strength. But in part 1 of this analysis, you did see how management is in fact executing on their strategy for the China retail business. And so in this video, part 2 of this Alibaba Q3 review, we're going to cover their other business segments, which from here you can see consist of international commerce, local consumer services, Cainiao logistics, and everyone's favorite Alibaba Cloud. Let's start with that international business. So from here, you can see that in the quarter, year over year, revenue is up 18%. But note that the adjusted EBITDA here has actually declined. So what's actually causing this, guys? Well, you can see them explain this by saying that they continue to invest in Lazada marketing and promotional initiatives to acquire and increase engagement with their users. And you would also wonder why they're investing so heavily in marketing and promotions to the point where they're pushing themselves into a huge loss. Well, if you remember from the Investor Day presentation on the international commerce business, they are just up against a juggernaut of competition in Shopee. You can see here that Shopee went straight YOLO on them and doubled their adjusted EBITDA loss to almost $900 million US dollars. And Shopee's very clear on why they did that, as they explained that the increase in the loss was because they just doubled their sales and marketing spend to US $2.6 billion by ramping up marketing incentives in an effort to continue to capture customers and opportunities across markets. And like I said in the Alibaba Investor Day presentation, Sea Limited, the parent of Shopee, is no joke. These guys are leading the Southeast Asia e-commerce space for a reason, and they don't care how much money Alibaba has. They are dead set on beating their ass in this market. So it's something to watch. I actually believe that there is room for both, but with my limited knowledge of the business, I also think that Alibaba should think about getting into Brazil before it gets too late and Shopee owns that market just like they do Southeast Asia. Now, as you guys know, their international business is made up of the retail and wholesale business. The retail business is where Lazada and Trendyol sit. Revenue for these sub-segments increased by 14% and 29% respectively. Now, that does look good at first glance, but if you recall, this actually is a slowdown from the pace of the last quarter because they were in fact up 33% and 34% respectively. And in the Q2 deep dive analysis that I did on this channel, I did say that I was suspect of their international business keeping up that pace of growth. So I didn't increase my forecast for those subsegments. So now they've sort of just come back to the right place where I expect them to be over the medium term. Now, what exactly happened with international commerce retail in the quarter? Well, those investments into marketing for Lazada paid off as order growth was up 52%. And as you guys may remember that I did mention last quarter that even though Alibaba wasn't talking about it, Trendyol would be expected to experience a slowdown due to their leadership just blowing up their currency. And we are now seeing that. Additionally, I'm not sure of the story here with Europe, but they put a tariff, it looks like, on cross-border parcels under 22 euros, which has caused a slowdown in European orders. Not sure why they would do that in an inflationary environment. Let me know in the comments if you guys know more detail about that. Now, onto the other side of this international business, we can see that the international commerce, which is where AliExpress sits, just had a very strong quarter once again. They experienced a growth of about 50% in the value of transactions driven by continued export growth of consumer and industrial goods from China. 29% overall growth in this subsegment really does continue its strength that we have seen this year so far. I'm not going to take up my medium-term growth forecast here because I'm still a little bit suspect on the sustainability of these growth numbers, but I'm excited to see how this business continues to grow out. Now, moving on to the local consumer services subsegment. Revenue continues to increase. It's almost up 30% year over year, but note guys that this business is in the development phase, so it remains unprofitable. What exactly caused that revenue growth? Well, their local consumer services segment is broken up into two subsegments, and in the home subsegment, which is similar to Uber Eats here in North America, there was just fast growth in the number of merchants using the platform and user penetration. Also, their strategy of giving users the capability to order non-restaurant type products is paying off as they have an increasing percentage of non-restaurant orders. I wish they broke that out by grocery and non-grocery to really see how they're executing on their strategy here. And of course, in their two destination business, they're seeing both an increase in users and usage frequency, so this is very solid overall. Now guys, as I've said on this channel already, be careful with this segment as the days of large losses are expected to continue and actually get worse as a CCP is once again starting to do CCP things. They are pushing Alibaba and Meituan to lower the fees for food delivery services so that more people can find at least partial employment from a perceived increase in demand. I don't know how much more demand this will cause, but rest assured, Alibaba won't win in this situation. Meituan stock already crashed on the news, so there's some pain expected in the quarters ahead with this segment. Moving on to Cainiao, there really isn't much to say as this segment largely lives or dies with the growth of the other segments, but overall revenue did grow 15%, which is great to see. I did want to point out here though that the unconsolidated revenue, which is what you want to be looking at here, because ultimately this segment is helping the other segments grow, and on an unconsolidated basis, it's up 23%, which is great to see. And finally, moving on to Alibaba Cloud. Well, it was a bit of a surprise that this segment only grew 20%, which is funny to say because 20% year-over-year growth is phenomenal, but we just have come to expect more from this segment. And so what went well? Well, they said that growth from the telecom industries was a large part of their growth in the quarter. The results were, of course, slowed down from the loss of what I believe to be ByteDance, the owner of TikTok, and slowing demand from customers in the internet and online education space. The online education space slowdown makes sense as China outright banned it. So only people that can afford to do after-school education now are the rich parents that can hire teachers as house sitters. I think that might be a boom for the divorce industry if the rich husbands get a bit too freaky with the house sitters, if you know what I mean. Now, personally, I really benefited from after-school education and even weekend classes in grade school as it allowed me to skip grades. So I hope that these poor kids don't get left behind, which I fear is what's happening in China from this rule. And the one item that I wanted to point out to you guys is that they showed us this chart at their investor day. And what they're doing in this chart, guys, is they're basically talking smack about the US cloud market by showing to us that China's market is where it's at. But if you're going to be doing that, you can't grow at the US market rates. This is why when we see year over year 20% growth, we're disappointed. So hopefully this turns around. I believe in you, Baba. Don't let us down. Overall, Alibaba's revenue in the quarter was up 10%, and on a year-to-date basis, it's up 22%. But as I said earlier in this video, we will likely not see a rebound on the stock price until we see a resurgence of the Chinese consumer, which may take a while. With that said, this of course isn't advice, but now it is really the time for me to start increasing my position. So in the next video, I'm going to be going over what I'm seeing in terms of strategies that you can ultimately utilize to buy more shares, including option strategies. On other channels, they'll just tell you that they're selling puts, but what exactly does it mean? I'll go over that stuff with you guys in the context of Baba. So if you don't want to miss out on that video, do me a favor and hit that subscribe button and ring that notification bell to be notified when that video is available. And I honestly think I got the best viewers in the world because the number of you guys that have hit that notification bell as a percentage of the overall subscribers is probably one of the highest on YouTube. So that's saying a lot, and I just really wanted to thank you guys so much for that. And of course, guys, if you missed part 1 of this Q3 analysis, no worries, you can get to that video right here.